Hey, welcome to FreightWaves Now, Wednesday edition style, tip of the cyclical cycle. We are here at Transparency 19 on the floor. Things are happening. In fact, it's all happening. And you know another thing that's happening? It's trade wars, tariff disagreements, things happening in the global sphere. You tickle China and the United States laughs. You never know what's going to happen. It's all very interconnected. And we have got our two economists in the kitchen today to bring you a little bit of insight about what is happening. Ibrahim Bayan and Anthony Smith. Without further ado, let's see what these guys have got up their sleeve.
Good morning, everybody. So I think a lot of the news lately has been focused on trade and tariffs. Recently this week, the U.S. said that they were prepared to raise a lot of the existing tariffs that exist on imports from China from 10% to 25%. That sent ripples all throughout stock markets. People are really worried that the price of imported goods are going to begin to rise significantly, and has very significant implications for the outlook for the rest of the year. And it's really making what was already a troubled sector a bit more complicated. Like the trade environment had already had a number of headwinds, already slowing down performance, and there's a potential that things could get even worse in upcoming months if this actually goes into pass. Now, right now, things are scheduled to increase as of Friday morning. The U.S. said that as of 12:01 a.m. Friday morning, these tariffs are scheduled to increase. Talks are going on right now, but so far no solution is really in sight. And Anthony will talk a little bit about some of the recent performance in trade and how things could get even worse going forward.
Thank you, Ibrahim. Just like Ibrahim talked about, there's a lot going on with tariffs right now, but one of the things to note is that things have been slowing for imports, exports for quite some time now. When we look at things in third quarter of 2018, there was a cyclical peak, nearing double-digit growth for both imports and exports. Since then, things have slowed down. Around that time, we saw that there was upward movement and trade towards the end of the year. In that second half, when we look at agricultural goods, a lot of people looking to beat tariff implications that would have set in. Now we're seeing that decelerating trend has really continued throughout the beginning parts of 2019, and this is something that's really going to be exacerbated through tariffs. But the main thing to note here is that there are fundamental issues at play. When we look at the overall U.S. economy, the service sector is slowing down, and there is slower growth on the global economy. On top of that, there is a relatively strong U.S. dollar, which is going to really start to limit and hinder the amount of goods leaving the country into the other parts of the world.
Yeah, and it's interesting because you're seeing a lot of the same sort of thing coming out of the survey data in the economy as well. Up here we have the ISM index for manufacturing new export orders, and a very similar pattern to what was in the goods export numbers, in that there was very strong readings in the earlier parts of 2018, readings above 60, which is multi-year highs for the ISM export index, but really numbers have come down fairly steadily since then. You can see the very steady decline all the way through the early parts of 2019, and as of April, the reading was 49.5. Now, with ISM data, keep in mind that any number above 50 is a sign that things are expanding in the sector. And once numbers fall below 50, that's a sign of contraction here. So the idea that like export orders have declined fairly steadily, are now in contractionary territory, is a bad sign for the export sector. Now, as Anthony mentioned, it's not just tariffs that's causing all of these problems. I mean, the biggest problem for the export sector for the U.S. economy is that global growth is slowing down. And when global growth slows down, it slows down the demand for things made in the U.S. that get shipped overseas. And so, tariffs make things worse, of course, but the bigger problem is just like the global economy on the goods side really isn't doing that well. And as long as that's the case, you're going to find a struggling export sector. And if tariffs make things worse, you could start to see numbers that are far below 50 and a very poor export environment, made even worse by policy.
That's right, Ibrahim. And there's also a similar story on the supply side of things. When we're looking at manufacturer supply index, we see that there has been slowing overall. and we can really kind of see where the baseline at 50 here, where things are really starting to get into the contractionary territory. One of the main things here to note is that there is a lot of inventory on hand, and due to that inventory on hand and slowing in the manufacturing segment, there's going to be a lot of goods still here, and that's really going to impede any more goods coming into the country. This is a trend that is really more of a fundamental thing, and again, it's really going to start to be exacerbated by potential tariff implications. So we're really going to see how things are moving forward, but we don't really have any overt expectations of upward movements with our current trend, and on top of any potential tariff implications going forward.
Yeah, and so, stepping back a little bit, the one thing I wanted to say is that all of this talk about import growth and export growth and how tariffs play in, this is really like the direct effect that tariffs might have. But keep in mind that there are also sort of these spillover effects on the rest of the economy that aren't necessarily trade related, but they affect overall economic activity in the U.S. economy as well. One of the things that we noticed is that really once the trade war with China began, which really started in July of last year when the U.S. implemented tariffs on Chinese imports and China retaliated soon after, businesses sort of froze up in terms of how much they were willing to invest and how active they were in the economy. So this is durable goods orders, excluding transportation. This is a measure of how many orders manufacturers are receiving. And you can see there was this fairly steady upward trend in the early part of 2018, really through 2017 through the early part of 2018. And then once you get to July of last year, it basically stalled and hasn't made any appreciable movement upward or downward since then. So part of the reason for this is that businesses have kind of been in a holding pattern on investment. Investment orders and capital goods orders drive a lot of these durable good orders in the overall manufacturing sector. And as long as businesses feel a little bit uneasy about what the trade environment is, you're going to find them sort of holding still in terms of investment spending. And so this is one of the spillover kind of effects. It holds back overall economic activity in the US economy, even if it's not directly related to imports and exports movements. That's not the only spillover effect. And I think most people are pretty familiar by now of what the impact that tariffs and trade wars are having on the stock market. For those that pay attention to stock prices, they might have noticed that prices plummeted at the end of last year because people were worried about tariffs that could potentially come. The early part of this year has actually been pretty positive for stocks, that talks were progressing between the US and China, and that drove upward movement in stocks. And as soon as there was a renewed threat that the US may raise tariffs again, you saw stock prices come down. They've been tumbling all week. And again, it's all in sort of response to this developing trade and tariff story. I think for a long time, markets had kind of priced in the idea that the U.S. and China were going to reach a deal at some point, and that this whole tariff situation and trade war would go away in maybe the second quarter or third quarter. But now, it's very much in doubt. And as that doubt has crept back in, you started to see stock prices fall down as well. This also has spillover effects in the economy. It reduces consumer spending. It hurts consumer confidence. That filters into retail. And so all that just to say that there's a direct effect of tariffs which has an impact on economic activity. And then there's also these kind of secondary effects that make the overall impact a bit worse. So definitely something to keep an eye on as we move forward and see how this situation develops.
And that we have a developing situation. Don't blame these guys. They're just tracking the data and reporting the facts such as they see them. So, and that is what is happening here on Wednesday in real time for FreightWaves Now. Thanks for tuning in. We are here each and every day. If you want to stream some of our content live, you can on right there on our FreightWaves site, Transparency 19. It is happening. Lots of sector talk and other fascinating things happening this very day, today, Wednesday. Good to see you. Thanks for tuning in. Remember to subscribe if you can to our YouTube channel. And in the meantime, don't worry, be happy.